Hey guys, in this video we're going to talk about income taxes. So this is section 8.1b. I want to start by saying that I am by no means a tax expert. There are so many things that go on along with calculating income taxes. So this is just a very general, brief overview of income taxes and how we calculate income taxes. Okay, so here we go. Income tax is a percentage of your income collected by the government to fund its services and programs. Me. If you look at this green chart, gives you steps on how to start to calculate your taxable income. Your taxable income is what amount you're going to use to figure out how much you're going to owe in income taxes. So step number 1 says you have to determine your adjusted gross income. That means you're going to take any gross income, that's any income that you earn throughout the year, including wages, tips, investments, or even unemployment compensation. So any sort of money that you get in has to be calculated into your income. Okay? You can subtract, though, any adjustments. So this includes any payments into a tax-deferred savings plan, so 401ks, if you have some sort of a medical savings account through your employer, sometimes a child care account can be tax-deferred, so any sort of adjustments. So you're going to take your gross income, you're going to subtract any adjustments, and that gives us our adjusted gross income. Okay? Once we have our adjusted gross income, we then have to figure out what our taxable income is. This is the amount that we are going to use to figure out how much we're going to owe in taxes. Okay? In order to figure out our taxable income, we're going to take our adjusted gross income from up above, and we're going to deduct two different things. We're going to deduct exemptions, and we're going to deduct deductions. Okay? So we're going to subtract out exemptions and deductions. Exemptions are a fixed amount that the government sets depending on how you file, single, married, joint, stuff like that, per person that you earn off of your taxable income, or off of your adjusted gross income, I should say. And I know this chart is kind of old and it gives us information from 2008. So I'm going to use the newest chart that your book has for 2017. I know that's still not very recent, but in 2017, the fixed amount for yourself and any other of your dependents was $4,050. That means $4,050 is deducted for you and for any children that you have. If you file jointly or married with a spouse, it also includes them. So $4,050 per person is deducted off of your adjusted gross income, which is good because the lower your adjusted gross income, the lower your taxable income, which means the lower amount you pay in taxes. So that's called exemption. So that's a set amount, and I'll talk about where to find that information here in a second, but it's a set amount by the government that we will pick for each person. In addition to exemptions, we're also going to subtract out what they call deductions. Now, there are two different ways that you can calculate your deductions. You could either calculate standard deductions, which is again a standard amount set by the government, or you can itemize your deductions. You're going to pick whatever one is the most so that you can subtract out the most. So you're either going to choose the standard deductions that the government sets, or you can choose an itemized deductions. Now, in order to itemize, things that are included would be something like interest on a home mortgage, state income taxes, property taxes, charitable contributions, and if you paid out medical expenses exceeding 7.5% of your adjusted gross income. So if you have all of those different things and they add up to be more than the standard deduction, you would itemize deductions. If not, then you would just choose the standard deduction that they set for us. Okay, so you'll calculate what those two amounts are. You'll subtract those two amounts out of your adjusted gross income, and that'll give us our taxable income. Okay, once we have our taxable income, we'll be able to figure out how much we then owe in taxes. We can figure out what tax bracket we're in and so on, and figure out how much we're going to owe at the end of the year. And we'll talk about calculating that here in a second. But once we figure out how much we're going to owe in taxes, our income tax, what we can do is figure out how much we owe in taxes. And if at any point throughout the year you donated what's called a tax credit, then that amount is taken off of how much you owe in taxes. Okay, so let's say you owe, I don't know, $3,000 in taxes, but you contributed a $500 tax credit to your child's school. Well, then at the end, did I say 500? So you really would only owe $2,500 in taxes. So that tax credit is taken out after you figure out how much you owe to the government in taxes. Those tax credits include up to $1,000 per child, child care costs, adoption credit, and a lot of times you are able to donate to schools to give them money to fund certain activities and programs for them. So all of that is taken out of the amount that you owe in taxes. So kind of a win-win for education. Okay, so I know that was a lot of information. Let's go ahead and do some examples to calculate all of those different things. You can kind of see how it all works, okay? A single man earned wages of $46,500. He received $1,850 in interest from a savings account. He received $15,000 in winnings on a television game show and contributed $2,300 to a tax-deferred savings plan. He is entitled to a personal exemption of $3,800 and a standard deduction of $5,950. The interest on his home mortgage was $6,500. He paid $2,100 in property taxes and $1,855 in state taxes. And he contributed $3,000 to charity. Whew, holy cow. Okay, so that's a lot of information. Let's go through it step by step, looking at that chart from up above to calculate all of these different items. Okay, so the first thing we're going to do is calculate the man's gross income. Remember that gross income is all of the income that he is bringing in throughout the year. So reading back through the story, what are some of the earnings he had throughout the year? So it looks like he had some sort of earnings there from his job. Oh, he also earned $1,850 in interest. So if you have a savings account and you earn interest, that is considered income. So you do have to report that when you calculate your taxes. He also won $15,000 on a game show, so that's also included in your income. It looks like all of the other stuff is all the things he paid or took out, right? Okay, so let's use those three numbers to figure out what his gross income is by adding them all together. So 15,000, 1,850, $46,500. Let's add all of these up to figure out how much this man's gross income is. I ended up getting $63,350 as his gross income. Okay? Once we figure out his gross income, the next step is to figure out his adjusted gross income. If you remember back at the chart, adjusted gross income is taking his gross income and subtracting any adjustments. So any of those tax-deferred savings plans or anything like that. So let's go back. Let's take his gross income, which was the $63,350, and let's subtract any adjustments. So going back through the information, did he contribute any amount to any sort of tax-deferred savings plan? Yeah, it looks like he contributed $2,300. So that amount is going to be subtracted out of his gross income to calculate his adjusted gross income. So this man's adjusted gross income, after taking out his tax-deferred savings plan, is now $61,050. All right. Now that we have his adjusted gross income, we can determine his taxable income. And this is the number that we're concerned with because this is the number that we're going to use to figure out what tax bracket we're in and how much taxes he owes. So let's go ahead and go through figuring out his taxable income. Remember that taxable income is made up from a couple of things. Let's go back to the chart. It's made up from his gross income minus two things, minus any exemptions and any deductions. Gross income minus exemptions and deductions. Okay, here we go. So his taxable income is his adjusted gross income, which we found from up above was $61,050. And then we want to subtract out any exemptions, and we want to subtract out any deductions. Okay? You can add those together first and then subtract the big chunk, or you could subtract them individually. You would end up getting the same answer. So that's why I kind of did it like this. So let's figure out, by reading through the information, what amount he qualifies for exemptions. So it looks like he is a single man, so it's just him, no dependents, no spouse. And it looks like he qualifies in this particular year, this must be old information, but we'll use it anyway, a personal exemption of $3,800. So he qualifies as a set amount that the government put for him for a $3,800 exemption. So we're going to take that $3,800 and subtract it off of his adjusted gross income. We now have to figure out what his deductions are. Remember that we have two different options. We can either do standard deductions or we can do itemized deductions. We want to figure out which one is more. So what I suggest you do is off to the side, make a chart. I would do standard deductions versus itemized deductions. And let's go through and let's list the different amounts, and then we can compare which one's going to be higher here in a second. So, reading back through the information, what was the standard deduction amount that was set for him if he filed his taxes as a single person? It looks like the standard deduction amount was this $5,950. So if he chose standard, he would be able to deduct $5,950 from his adjusted gross income. Or he can file using itemized deductions. And so let's go back and figure out what items qualify for itemized deductions. So looking back at the chart, what items does he have that qualify for itemized deductions? Well, it looks like interest from a home mortgage, right? $6,500. Property taxes of $2,100. State income taxes of $1,855. And isn't charitable contributions part of that too, the $3,000? So let's take all of those, let's add them together, and let's compare the standard versus itemized. So $6,500 plus $2,100 plus $1,855 plus $3,000. And then in the end, when you added those all up, did you end up getting $13,455? So since that amount is more than the standard, instead of using the standard deduction of only $5,900, he's going to choose the itemized deductions of $13,455 because that's going to reduce his taxable income more. So let's use the itemized deduction amount of the $13,455. That means we're going to take $61,050, we're going to subtract out his exemptions, $3,800, and we're going to subtract out his itemized deductions of $13,455. This will give us his taxable income. I ended up getting $43,795. So this is the man's taxable income. This is the amount that he will use to figure out what tax bracket he's in and how much money he's going to end up owing in taxes at the end. Okay? All right. Make sure that you practice those steps because we're going to add to it here in a second and talk about actually how to figure out how much you're going to owe in taxes. Okay. This next chart that we have looks like it is the tax bracket chart. It gives us the standard deductions. Remember I was talking about that? Remember the standard exemptions that we were talking about per person and dependent? It looks like this is from 2016. So not too recent, but not too far off. So it gives us a good idea anyway of how it all works. Okay, you can see in the different columns that you can file different ways. You can file single if you're unmarried, divorced, or legally separated. You can file separately, so if you're married and each person files a separate tax return. You can file married jointly, so if you're married and both people filed one single tax return. Or you could also file what's called head of household if you are unmarried and paying more than half the cost of supporting a child or a parent. Okay, so different kind of categories, and in each category you can see that there's different amounts depending on what tax bracket you're in. Okay, so this chart is kind of complicated, but it helps us figure out how much we're going to owe in income taxes. What it means is that, let's say that you're a single person and you make $100,000. Let's say your taxable income is $100,000. So $100,000 kind of falls in this category right here. So this would be the tax bracket that we fall in. What ends up happening, how we calculate how much we're going to owe in taxes, is we're going to figure out what 10% of this bracket is. 10% of $9,275. We're going to figure out what 15% is of the next bracket. So not the whole entire amount from 0 to $37,000, but from $9,275 to $37,650. We're going to figure out what 25% is of the next bracket, and then we're going to figure out what 28% of the next bracket is up to my taxable income, which for example would be our $100,000. Then we would add up all of those amounts. That would be our tax amount that we owe. Okay, I know that was kind of a lot of information. Let's do an example so I can show you what it actually means and how we're going to calculate our income tax. So here's an example. It says here that we have a single woman with no dependents whose gross income, adjustments, deductions, and credits are given. Use the marginal tax rate from the table, so what we were just talking about, and let's calculate how much this lady is going to owe in taxes at the end. Okay, so again, she's a single woman with no dependents. If she's a single woman with no dependents, she is going to file as a single person, unmarried, divorced, or legally separated. So she falls in that column. She has no dependents, so she only qualifies for a single standard deduction of the $4,050, not deduction, I'm sorry, exemption. And then she qualifies for a standard deduction of $6,300 if, remember, her itemized deductions aren't more than that. Okay, so let's go ahead and go through the steps that we followed in the last example to figure out what her gross income is, her adjusted gross income, and then her taxable income is first before we figure out how much she's going to owe in taxes. So the first thing we want to do is figure out her gross income. It says here in the problem that her gross income is $62,000. The second thing we want to do is figure out her adjusted gross income. Remember, that's her gross income, the $62,000, minus any adjustments, any sort of tax-deferred savings plans that she has. So it says here that she has adjustments of $4,000, so I'm going to subtract off $4,000 from her $62,000, and so she has an adjusted gross income of $58,000. The third thing we're going to do is calculate now her taxable income. Remember, her taxable income is taken by taking her adjusted gross income, her $58,000, and subtracting two things. Remember, the exemptions and her deductions. So remember, the exemption amount is a set amount that the government puts for her as a single person. And so what is the standard exemption amount for a single woman? It looks like that's the $4,050 exemption amount. It's only her, so that's only one time. If she was married, that would be $4,050 times 2. If maybe she had a child and she was married, that would be $4,050 times 3, so per person, okay? If it's just her, though, it's just the $4,050. All right, the next thing we need to do is figure out her deductions. Remember, this is where we have to decide if she's going to do a standard deduction versus an itemized deduction. So again, off to the side, I'm going to make a little chart that talks about the standard deductions versus her itemized deductions so that we can decide which one's going to be more beneficial for her. The standard deduction amount for a single woman in this year is $6,300. Let's figure out what her itemized deductions would be then. So I need you to go through and I need you to figure out what things qualify for itemized deductions. Now be careful. It looks like here she's got mortgage interest, that's $7,500. She's got property taxes, that's $2,200. She's got charitable contributions, that's $2,400. Now be careful. She has $1,500 in medical expenses that weren't covered by insurance. But if you remember back up in the chart, it says that medical expenses will only qualify if they exceed 7.5% of your adjusted gross income. So we've got to figure out what 7.5% of her adjusted income is to see if that $1,500 qualifies. So let's go back to her adjusted gross income. Remember that was the $58,000. And let's figure out what 7.5% of $58,000 is. Remember, of is multiply. So I'm going to figure out what 7.5% of 58,000 is by multiplying it by 7.5%. But actually not by the percent value, by the decimal version of. So I'm going to actually multiply it by 0.075. And let's see if that $1,500 qualifies. And so I ended up getting $4,350, which means if she happened to spend over $4,350 in medical expenses, then those expenses would qualify. But because she only had to pay out of pocket $1,500, that does not qualify, unfortunately. So be careful not to add items that don't qualify to make sure that your numbers are accurate. So really, she only qualifies for the $7,500 plus the $2,200 plus the $2,400, which is a total of $12,100. So between that and the standard deductions, which one should she use? It looks like she should use the itemized deductions, as they're a little bit more than the standard. So we're going to take that $12,100 and we're going to also deduct that from her adjusted gross income. So we're going to take the $58,000 minus the $4,050 minus the $12,100 to figure out her taxable income. I ended up getting her taxable income as $41,850. So this is the number that we're going to use to figure out how much she owes in taxes. Okay? All right, make sure that that all makes sense to you, because that was just the first half. All right, the second half is kind of the more complicated part. This is where most students make some mistakes, so we've got to be really careful. Okay, are we ready? Here we go. Step number 4 is we're going to figure out her actual tax amount, so her income tax amount that she's going to owe. We're going to do that by using the chart up above. Okay, remember that her taxable income is $41,850. So if she is a single woman, remember she falls in this first category, in this first column, and her taxable income was $41,850. So she would end in that 25th percentile category. Okay, so what we have to do is go per tax rate to figure out how much she's going to owe in each category. So it's helpful for me to kind of put, I don't know, it's not really, I guess it is a number line, starting from 0 to $9,275. $9,275. This was that first tax bracket. This was this 10% tax bracket. Because this woman is going to owe 10% on just that amount. So what we have to do is we have to figure out what dollar amount is in that category. From 0 to $9,275 is $9,275. And we've got to figure out what 10% of that amount is. So we're going to take that, excuse me, $9,275 and multiply it by 0.1. So in that category, it's $927.50. But we're not going to stop there, because we have to go all the way until we hit her taxable income of $41,850. So the next tax bracket went from the $9,275 to what amount? It went from the $9,275 to $37,650. $37,650. And I know your chart says 9,276, which is kind of misleading, because there's a dollar difference in there, it actually doesn't start at 9,276. It backs up to 9,275. The government is not going to let you have that dollar difference. And so it really goes from $9,275 to $37,650. We've got to figure out how much money is in that range, and then she's going to be charged 15% on that amount. So how we're going to figure out how much money is in that range is we're going to take the $37,650, we're going to subtract the $9,275, in order to get an amount of $28,375. So $28,375 is in this little group, and she's going to be charged 15% on just that amount. There's $9,275 in this first group. We've got to figure out what 10% of that is. There's $28,375 in this next group, and she's going to be charged 15% on that. So let's take the $28,375 and multiply it by 0.15 to figure out what 15% of that amount is. I ended up getting $4,256.25. So that's just in that category. So far, she not only owes the $927.50, she also owes another $4,256.25. But we're still not done. Remember that we have to go all the way up to her taxable income, which was this $41,850. So let's keep going. So from $37,650 all the way until I get to, remember, I don't want to go all the way up to $91,000. I want to stop then at her taxable income of $41,850. What we have to do now is figure out how much is in this category, and then she's going to be charged 25% on just that amount only. So in order to figure out how much money is in just this category, let's take the $41,850 and let's subtract off the $37,650 amount. So $41,850 minus $37,650, there's about $4,200 in that little section. $4,200 that she's going to be charged 25% on. So let's figure out what 25% of $4,200 is. So 4,200 times 0.25 gives us $1,050. So now that we've gotten all the way up to her taxable income, in order to figure out how much she's going to owe in taxes, we've got to take the $927.50 plus the $4,256.25 plus the $1,050 and add all of those pieces together. Again, 10% on just this amount, 15% on just that amount, and 25% on that amount, and then we've got to add them all together. So this woman at the end will end up owing $6,233.75 in income taxes. Now, the only way that she'll have to pay less is if, remember, she contributed a tax credit. So let's go back to the information and figure out if there's any sort of tax credit that we can deduct and make her tax income a little bit lower. Oh, look, it looks like she contributed a $500 tax credit. So really, instead of her owing $6,233.75, we can subtract off that $500 credit, and so now she really only owes $5,733.75 in taxes. Whew, I know that was a lot, so please make sure that you go back, re-listen to that part of the video if you're not sure of anything. Email me, message me, and ask me any questions you have. But you will have questions like that on your test where you will have to go through step by step and calculate somebody's income taxes. And we have to be really careful because if you mess up on any of those steps, it messes up everything after that. Okay, so be really careful. I'm going to go ahead and stop the video here and then add a second video to finish off 8.1b because I feel like this is already